Good morning, Stan Ehrlich, August 1st, Tuesday, market analysis. And I always start out with the indexes. So I'll start talking about the spider and then the DIA and the QQQ and sometimes the Russell 2000. Now, the daily data chart on the S&P had last Thursday a major bearish engulfing ER sell signal, which hasn't started to make any money yet. Friday, it came back up a little bit, closed above our new short sale prices. Friday, it was a little scary. It went up a little bit more, but we weren't hit our stop. We're still short. And today it is down slightly, $1.25 or 1.25, which isn't very much. Currently, it's a little bit above yesterday's low, which it already broke below a little earlier. So that's a minor new low for a day. I want to see it, I need to see it get below today's low and then the low of Friday, and finally below Thursday's low of last week, which will make a new low for approximately 2 weeks. I doubt that's going to happen today, but you never know. So we're short and our stop is in place and it has probably come down somewhat. Originally, it was starting to be at 459.45, but it's not there anymore. It's at a little lower. So at this very moment, we have a slight rally. We're down 117, a minor new high for a couple of hours, and a little support level is developed around 455.5, two lows this morning. So I'm expecting to see lower levels and starting to see it quicker the better. Now the DIA is a little different. We already went up and made a new high for the trend, which cancels out the Thursday of last week. Bearish engulfing didn't work for the DIA, which is not particularly a good omen for the spider either, but that doesn't mean the spider's not going to work. If everything started to head south at this point, we'd be in very good shape with the spider. And the E-mini and the micro E-mini as well. And I'll get to those in a moment. So I am expecting this to be approximately a rally high, and we are again overbought in the DIA, the Dow Jones Industrial ETF. So in a resistance area, overbought conditions, I'd love to see another bearish engulfing and come down below yesterday's low, would generate that for me, but it's not happening yet. And we are still up a half a point, not much. So I think it could fall apart pretty easily and quickly, but it hasn't started to do that yet on the DIA chart. So QQQ is weaker today. It is still lower by a half a point. It made lower lows than yesterday and has not at all so far been up to unchanged. So momentarily, it's very close to the high of the day so far, and that is almost unchanged, but not quite. And so the Qs are definitely on the weaker side relative to the DIA, which is on the stronger side. Remember, DIA made a new high for the whole trend here for many months, but it's not anything aggressive about doing it. And the spider's kind of caught in the middle. It's down some, middle of the range. What about the Russell? It's very much like the spider. The high is approximately the middle of yesterday's range. It's been below yesterday's low. Yesterday, the Russell did make a new high like the Q's DIA, has done today. So all four of these indexes are very begrudgingly not willing yet to behave like I was expecting because of the last Thursday's bearish engulfing, which usually puts the market down within a day or two. And that has not happened. So at any moment, I'm going to be proven right or wrong, and that's closing below last Thursday's low as far as starting some significant down move. And already, again, we're out of the DIA, and we never did get a signal, a red bearish engulfing ER sell signal on the QQQs. We did get one on the 2000, Russell 2000, but it did get stopped out with a small loss. Now, if you can see here on the micro E-mini, which I don't show very often, that because of the trading hours being substantially longer, the overnight markets were capable of getting higher than previous trading range highs. Even this morning, excuse my cough. And we have been below yesterday's lows also, which generates another ER sell signal. That's 3 of them in 5 days. I don't think I've ever seen that many ER sell signals. Pardon me. A little coffee. In that short amount of time. Now, that doesn't guarantee that it's going to be heading south, but it sure looks likely. And it is still lower on the day by 1375, 14 micro E-mini points. And that's why we have red price action on the 1-minute chart below. Same thing exactly as you would expect from the ES or the E-mini itself and the micro mini also. Okay, let's go to futures. We got some good stuff to look at here. Bonds are making a very slight new low, lower than the 88-day cycle low that we pinpointed exactly on time before it happened a few weeks ago. And it is an incredibly good cycle. This is the last 6 events, every one of them 88 days apart. The green bar represents the 10% of 88 days price range, or 4.4 days before and 4.4 days after the middle of the bar. So if the market bottoms out during the bar, we consider that a good cycle low. If it bottoms out in the dead center of the green bar, we consider that amazing. So that's good. That's good. That's pretty much amazing, 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 and amazing. So the last cycle worked for about a week or so. Now we're back down to about the same levels in a support area and very close to oversold. Not yet. I think bonds are very close to turning back up again. I think we're about to see another substantial rally in bonds. It hasn't started, and I'll try to pick it off for you when it happens. The next chart is going to be the 10-year notes, and it is very similar, as you would expect, to the bonds, challenging previous lows from a couple days ago. Not quite a lower low, but very close. A little bit below a support area, which is held before, and the cycle is just outstandingly good, like in the bond market. So I'm expecting it to turn back up again very soon, like maybe today or tomorrow. Next chart is going to be crude oil and the energies. We have been very overbought for the last few days. It touched the beginning of a resistance area in red yesterday. So far, we have an inside day today, no higher than yesterday's high, approximately unchanged, down a few ticks, and the low is close to yesterday's low, but a little bit above. It's a doji, and it indicates uncertainty to some degree. I think we're in the process of turning down. If I'm right, I'm expecting it to come down to the support level below the market at 73 and maybe a lot lower than that over the weeks to come. This could be a very significant turning point. It looks like it's the right conditions to have that. So we have sell signals on the top of that rally exactly. Not that many signals in the crude lately, but the conditions are correct for a turn down signal or no signal. Next chart is going to be, excuse me. Here we go, 10-year notes. I'm going backwards. Okay, just a moment. Bonds, heating oil. Got up to and now through a resistance area, but it's still very, very, very overbought at 94.77. It's incredibly overbought. The last time we were this overbought on any symbol or instrument was last January, when we had a bearish engulfing at the top of the rally and another one a couple of days later, right in front of the very beginning of a big, big break. It wouldn't surprise me a damn bit if we didn't have the same thing happen very soon. Next chart. Natural gas already on the downswing. New lows for a couple of weeks. Last signal we had were bearish signals. I'm expecting to see this 2.4 minor support broken, and we're probably going to get down in the 2.3 area. Next, gold, silver, platinum, copper. We caught the top of the market a couple of weeks ago in gold. That's exactly why I've created the ER buy and sell signals. A couple of days later, a week later, we had another sell signal that worked great also. We are now, today, in new low ground. I am expecting a challenge of 1,940 and lower. Next, silver. Same damn comments. Got the top of the rally, but in silver, holy moly, we caught both highs of a double top with red bearish engulfings, the low before the double top with a bullish engulfing, and the low after the double top with a bullish engulfing. And now, in the last couple of weeks, two more bearish engulfings that are working. The last several months or few months in the silver market have given us fantastic signals. What about platinum? Not quite so much. We caught the bottom of the break February 27th and the top of the rally on January 11th. Nothing lately except an overbought condition testing the bottom of a previous bull trend line, which I mentioned before it happened, the day it happened, and of course afterwards, like now. And today we made a lower low. I think it's heading down toward 894 and lower. Next, high-grade copper, brand new, darn it, great. On time, well, I couldn't say time, that's cyclical talk, but it is in an area of resistance. It is in overbought conditions, and we have a bearish engulfing. This is the beginning, I hope, of a downswing in copper, which should challenge at least 3.6 to down to 3.5.5. Today's the beginning. Next. 3-4 days ago, we had the beginning of soybeans. It was overbought. We had an outside down day within the allotted number of days after not being overbought. So that worked properly according to the code. This is all automated, 100%. You don't do anything but watch and hope that the signals are good. This is outstanding. Bearish engulfing down nicely, down super sharp yesterday, and today a little bit of a bounce for the first time after the sell signal, and a heck of a good start. I'm looking for a minimum test of 1,300 to 1,280, and probably that's not going to hold, and it's going to break into lower lows. Next, soybean oil. It simply got overbought and turned down. So I'm looking for a little bit more downside, especially if I believe soybeans are going to go a lot lower also. Probably will drag the oil with it. Next, soybean meal, same commentary, overbought, a little double top, and both of them are overbought. By the way, my RSI in the subgraph is a custom RSI. It is not exactly the same as Wells Wilder, and I learned RSI from Wells himself. He's an old friend, he was an old friend of mine. I think he passed away in New Zealand. So it is not exactly what Wells taught me in the beginning. There's a little gap to close, a tiny one, and it looks like it almost closed it on today's rally, but not quite. So that may have done the trick. It may be ready to make new lows already and not finish closing the gap. My statement about gaps is gaps are almost always closed, and they are like a black hole in space. They tend to suck the price action back into the gap area. And that's a really good place very often to get into a new long or short, depending upon gap up or gap down. Next, corn. No signal lately. We had a buy signal a few weeks ago that did not work out exactly the way it was supposed to. When you see the green or red bars, they're frequently at the high or the low of a major swing, like we have way back here in corn, September of 21. Another buy signal, but that worked great, but it wasn't the bottom. One good sell signal and another bad one. A couple of minor good sell signals. Good sell signal, nothing major. A couple of bad buy signals. And when we had bad signals, the losses are always reasonable. They're handleable. I hate trading and taking a big loss. That is just wrong. Most beginning neophyte traders don't know how to handle risk. And this is built into the ER signal trading system. So I'm looking for a test of the lows, as I've talked about all along. And I think we're going to get below 472. And when that happens, Katie bar the door. It should break down a lot and a lot more quickly. Next, wheat. Same kind of commentary here. Up to resistance, failure to follow through, turned down a few days ago, unfortunately no signal, and it wasn't even exactly overbought at the moment, at the high, so resistance stopped it, and I'm looking for lower levels, making new lows for the whole trend here. Wheat. So now cattle, we caught the top, and this is the first decent rally day after we have our initial sell signal. It is depending upon how you like to move your stop, and it can be automated and changed in the automation, adjusted, but it's still automated. You're probably out of this trade and made some very good money. And that would be with either ER3 or ER1, 2 ways to get short. You can use both or one of each, depending upon your preferences. Next, hogs. I think it's going to turn down very shortly. I think this resistance area, and it's a very broad, sloppy one, is going to stop it again. So I'm not expecting to see a higher high than the high that we made on July 7th, last month. I'm expecting to see lower lows, lower than 80 very soon. Next, OJ. Finally, we got a bearish engulfing yesterday. ER1 got short when it got below the previous day's low, Wednesday's low of last week. Or actually, sorry about that, Friday's low of last week. This sell signal was yesterday, Monday. So we're short on the opening this morning for ER3. We have a small profit at the moment, and I'm looking for it to break down below Monday's lows and start a significant swing down to at least 290 and maybe even lower than that. You have to remember that the RSI got way up into the low 90s, which does not happen very often. And it usually produces big technical corrections. Now, it may not turn into a bear market, but it might. But we have to get way down, at least below 248 and certainly below 233 in order to be convinced that a longer-term bear market has started and would persist for quite a longer time period. Next is cocoa. Today, for the first time for a while, we got a brand new short sale signal. ER1 is short now, small loss momentarily. ER3 is going to try to get short tomorrow, the next day, and the next day, around that red dot. At the moment, the price would be 3,540, but that could change by the end of the day if we make higher highs or lower lows. So we got a sell signal today on cocoa. I think it's heading south starting now. Next, that is the same thing I said last Thursday for cotton. Friday, it dropped down more. Monday, it came up a little bit. And today, the high is 86.28. Yesterday's high was 86.31. The trigger to go short is 86.30. It moved one tick above my offer for ER3 and is pretty close right now. But we're short at the high of the rally yesterday. And we had plenty of opportunity on a scalping position to make some money yesterday. If you want to resell it and go short again, I don't see why not. It's not part of the strategy per se. Next chart, sugar. Really not too much comment. It looks a little bearish to me, so I'm looking for it to slip off some more. I've been talking about it getting down to 20 to 18. I think that's still quite plausible. And a little 1 or 2 day rally here. And lastly, coffee. We had a couple of buy signals around the low of the move, but it wasn't the lowest low. And now we're seeing new highs. So I think the rally is going to persist a little bit more. I'll call it up to about 176, maybe only 171. So there's nothing really great about this extended rally. It's not much. And I think we're going back to crude oil. That's it for today. You have a great day. See you tomorrow.